Returns coming in now for the largest endowments, including the Ivy Leagues, and they've largely been disappointing. Bloomberg's Michael McDonald joins us from Boston with the full breakdown. Michael, I was going through the returns, and they were down noticeably from last year. On a broad-based level, what drove the underperformance?
Well, I mean, really, we need to start with the headline number, which is Harvard beat Yale. It's the football metaphor that we have to use. So Harvard came in at 6.5%, Yale came in at 5.7%. We got that on Friday night. So that's the headline that at least Harvard would like to see out there. The numbers are, we're trending lower this year. What we're seeing is these universities, their endowments, they have very significant exposure to international markets, emerging markets. Your S&P 500's up in the double digits for that fiscal year. International markets are, they're mostly flat. So with that bias in place, we're seeing, a drift downwards, an underperformance against what you would see these domestic equity benchmarks. But I think, the greater scheme of things, what they look at is each other, and at least Harvard's celebrating right now.
They might be celebrating, although they've had a pretty rough run of it. And I'm wondering if you dig into their returns, the 6-some-odd% returns compared to more than 10%, I believe, last year. And I'm wondering whether the decline was largely due, again, to that South American agricultural real estate that we were talking about last show.
Yes. So the sense that I have is that we're going to see natural resources again weighing on their portfolio, and that's been an ongoing issue for them. That's part of this revamp of the portfolio, some risks that were taken that they want to get out of that portfolio. I think the general drift lower, again, it's like international markets. We do know that Harvard significantly increased their exposure to hedge funds over the last couple of years, doubling it to something in the order of $13 billion. There's a mix. There are some good performers in there that I know about, and there are some that haven't done so well. When you got a $40 billion portfolio, it's hard, when you've got one really good performer to really move the needle for you. So, they're trying to turn things around. Their performance is lower than last year, but again, I think they're pretty happy with where they are relative to some of their peers.
What about Brown? Brown came in as the leader, Brown trouncing them all, so perhaps that will be the headline over in Providence, Rhode Island. I'm just wondering what led that outperformance relative.
Yeah, sure. So, and I will point out, we got to go back to the football metaphor. Brown lost to Harvard 42-7 on Friday night. So that is sweet revenge on the part of Harvard that they were able to beat up on Brown at Harvard Stadium. The portfolio at Brown, you've got a former hedge fund manager, Joe Dowling, who's running the portfolio. It's relatively small. He's a former tutor guy. He's outside of the box in terms of the kinds of CIOs that we usually see. He's got a very large hedge fund position relative to his peers. So clearly he's made some good bets, and it can, when you've got a small portfolio around $4 billion, that's big for you and me, but for an endowment, that you can really move the needle if you've got some really significant outperformance among some of your bets.
Just real quick here, the trend across the board, are they increasing or decreasing their allocations to private debt, private equity, and hedge fund strategies?
We're seeing a mix of things so far. One thing we are seeing is you are seeing more cash. You are seeing the hedge funds are pretty. The allocation is quite large, which does suggest that maybe they are thinking about the end of this cycle.